Opportunity for Winston Capital Advisors, and we're going to cover the week of August 6th through August 10th. We're going to talk about inflation and the coming numbers this week. A lot of news on emerging markets: Turkey, Argentina, Russia, Mexico, Brazil, all over the place. Uh, a couple of good articles in barrels, Tesla, Citgo in Venezuela, and that's it. And what's coming this week? Let's start with the inflation numbers. We had good inflation numbers, CPI, PPI, in line with what the Fed is looking at, above 2%, 2.5%, depends how you slice and dice the number. But what's very interesting is that the salaries are below that level. So the real salary is actually decreasing, not increasing, despite the economy with full employment, and a very tight labor market. So clearly, the market is expecting 90% of chance of increase in rates by September, and a 70% probability of both September and December. Remember, if that's the case, we will take rates to 2.25%. And we will have this week the retail sales, which is also very important because as we had a 4.1 GDP on Q2, and many economists are still for the year at 2.5. They're thinking now that the third quarter, and especially the third quarter, the fourth quarter, maybe less, the numbers are a little too low. So they might have to raise the number for Q3, and the year will not be a 2.5 year, but maybe could be a year of maybe 2.75 to 80. So we'll see. Those numbers will get adjusted. Retail sales will be very important, and clearly it's something that the market is looking very closely, especially the fixed income market. In emerging markets, big turmoil. The dollar rally against most currencies, big spanking. Even even with the European currencies, 114 on the euro, 127 on the pound, and all started with Turkey. Turkey was the first country with problems, followed by Argentina and others. But now Turkey, it got into another convulsion of problems, 14% drop on the currency, and now the market is looking at these facts. It's a country that needs about $200 billion a year of foreign financing, 40% of all the debts in the system. Corporate banking and sovereigns are dollar or hard currency denominated. So with the devaluation closing of 40% for the year, how they're going to start servicing the loans. And also now, the European Central Bank is looking at what European banks are exposed. BBVA from Spain, Unicredito from Italy, and BNP are the most exposed. So far, not a problem, but as we know, the problems in the world usually start with the FX, then they go into the financial system, and then they go abroad through the financial system mechanism. So far we have not seen any contagion outside of the emerging markets, but it's been a lot of turmoil. Russia was badly hit, there were sanctions there, and also in Turkey there is an issue with sanctions on the United States that are compounding the problem. As we were closing markets on Friday, there was a lot of rhetoric by President Erdogan, but it was very short in any sort of details or comments on what to expect or what he was planning on doing. So we will follow that. Jump into Argentina, which this scandal of the notebooks, bribery scheme for public works, although it was the previous administration and some people are in jail already, it affects a lot of big conglomerates operating today. So that's denting more investor confidence. Remember, Argentina had problems. In April, we recommended to sell our positions there. We thought that, it was not going very well. They went to the IMF package, the market bounced, but now we have this scandal really hitting more, on a situation that it was already complicated. Consumer confidence, investor confidence. So the assets there tanked. The famous 100-year bond that was at par value is now traded at 75. So clearly an issue there. We recommended to sell in April when the problem started. We have not got back, and we're not doing it so far. Let's jump into Brazil, which so far was going okay. However, a lot of political noise again. Apparently, some court will be ruled if President Lula can run for president again. Allegedly, because he's been condemned, he cannot run automatically. But the PT, his party, has named him as the sole runner in the ticket. He's leading in the polls, although he's in jail. So this could create a lot of political noise in Brazil. We'll also be following that. Mexico, the market that we like a lot, is doing the best. It was up 5-6% for the year last week. It almost gave all the gains in the last 2 or 3 days, given the whole emerging markets debacle, but we still like it. AMLO, the new president, is fast in trying to get NAFTA signed and approved, and is also having a lot of conciliatory tones in many of his political views and decisions. We'll follow that. We like that market. Despite the correction, we'll stick to it. Jumping to Venezuela, Citgo, the jewel of the crown of Venezuela, which is the oil refinery and distribution in the United States, 8,000 gas stations, tankers, deposits, oil ducts, and refineries. A court allowed one of the creditors of the country to seize the assets. Yet, it gave time to the parties to find a point, or and Venezuela says they will appeal the decision. It's about $1.2 billion that this company lost on an extradition of a gold mines in Venezuela. They went to international court, they won, and Venezuela didn't pay the reward. So, in all that, I think it's very important. It's just a matter of time before this happens. Venezuela has defaulted in a lot of people, and these are assets out there. However, last week, when Rosneft showed numbers, it showed that Venezuela has paid down $1 billion of debt that they had with Rosneft, and also Petrochina has shown another $1 billion that Venezuela paid down to them on debt. So maybe it can get paid, we will see, but definitely it's an asset that is a jewel of the crown, is key for Venezuela heavy oil to be diluted and transported around the world. So if they were to lose that asset, it will be a serious loss for the whole oil complex in Venezuela. And in the United States, the big thing was Tesla. Out of nowhere, through a tweet, Mr. Elon Musk said that they were going to take the company private out of the equity markets, doing a leverage buyout of the firm at $420 a share, premium of 20% of what it was trading that day. Since then, complete mystery. No one knows where the money is coming from, whether it makes sense or not. It will be the largest LBO ever. And now the SEC is looking into that, if this is not a strategy of Mr. Musk to try to pump the stock, which, as we know, it carries heavy fines and sanctions. The board of Tesla is very worried. You know, they're liable for any of these things, so they are seeing what to do, how to proceed. And so far, we have no news. Probably it will be a lot next week. Very good article on geostrategy on barons, talking about the world, about what is happening. Recommend for you to read. But one of the topics is ITA, the ETF on defense. We recommended a few weeks ago when President Trump came back from the NATO meeting. We say if these countries will increase from 1 to 2% the defense spending, that's a lot of money. Not all the European firms will be selling, fighter jets, submarines, rockets, but a lot of the American firms will compete and will win. So we like that idea. ITA, we bought it. It's a sleepy trade, not something that's going to fly, but I think it makes sense in what's happening in the world. We'll see this Russian interference, this the China ambition through the Silk Road and the expansion, the protectionism. So it's going to be a lot of integration in economic warfare, if you want to call it, cyber warfare, hacking, real assets. It will be more and more integrated. So we think that will create a lot of defense spending around, especially the Western world. That's all I have. I think we spoke with everything. We covered everything. And as you know, for our subscribers, 9:45 every day we connect. For everybody else, you can visit our page on winston.capital or our channel in YouTube, Fabian Onetti. Have a great week.